Of course, absolutely. Yeah. But it takes money to make money. Another thing is a lot of people think that when you're a career trader, that trading will equal consistent weekly and monthly income flow. And you could we are going to get into this tonight, as a matter of fact. But you could ask a poker player for sure about that. The variance in the probability for the odds on the bets that you're making, and win rate, and the lose rate, and profit factor, all that, when you combine them all together, um, in poker, for example, you can go 3 years on a bad streak if you're playing live poker. You can accelerate that uh, with multi-tabling online to maybe 3 to 6 months, but you can have incredible bad tricks and have played perfectly, have not made mistakes, have played perfectly. It's just the way the randomness happens to crack in that time. So, one thing that a lot of people don't realize when they're asking or sort of getting this romanticized view of making money as a trader is that it's sort of like feast and famine. You'll have cycles and periods, and you need to be in a situation where you can wait out a bear market, for example. You should be able to wait out a bear market for the whole bear market. So that could mean 6 months to 3 years. So, you've got to build up your nest egg. So you've got to have a job first. You have to labor and make money, save money by not spending as much money as you make. That's period. That's number one. If you can't be disciplined about that, you'll never win in life. I mean, you'll never. I mean, success in life is he who, you know, gains the most resources. That's you have to. Success in life is having at least the amount of resources you need in order to thrive. That's it. Now, if you have more, then hopefully you're of the nature where you can give back or provide for, a significant other, or family, or community, or bigger. Uh, but if you want to be more successful, then you've got to make more than what you personally need to thrive. If you want to give back, if you want to build some wealth for the world, right? So, you need to have built up. You need to be able to save. That's number one. Saving, if that's a problem for you, you've got to get over that. You've got to save more than you spend. You got to make money. Everybody can make money. Anybody can make money. A homeless person can make money on an off ramp. You know, and in fact, you could probably make more money on an off ramp as a homeless person than you can in a big city than you can at some jobs. So, but it's how you leverage that, from there. Do you save it, or what do you do with it? And and once you've got that down, then you need to hoard and you need to stockpile, and then you need to start putting that stockpile to work. And then there's the risk pyramid where you put most of your money at work into the safest things, and you can put a little bit of that money into work into some riskier things. But there's no way you can. What did you say? Do you have someone you can do this as a full-time job? There's no way you could do this as a full-time job with $500. Quit your job and $500 and you can do it, or even 20,000. You need to be able to quit your job and do this. You need at least somewhere up there 40, 50, 60, in that range, minimum. Some of you have more than that. You're ready, but it's going to take probably about a year or two of as much training as possible to get you to be able to manage your capital successfully like that. Now, once you have 60,000 or more, 100,000, you should be able to produce a consistent income. Below that, it'll be less consistent, but you'll need still to take those risks. But don't quit your day job for a while. There's a lot of misconception about that out there. Anyway, we're looking at Minim and Omega, and I want to talk about the market really quick. The market is opening below yesterday's close, just like yesterday. And Bitcoin is opening above yesterday's close, just like yesterday. Oh, good, Randy. Yeah. Oh, good. I try to teach the other people here, they should take up poker, literally just because it helps inform you of, there are definitely crossover concepts, especially with probability if you happen to go that deep in poker, which, eventually anybody does. I mean, the most disheartening thing about poker is becoming a master at it and understanding everything about it. And then it becomes boring, and you only make money when you're sitting in a chair. There's no passive income in poker. Your ass is in a chair and you're making money or not. And you can make maybe 10, 20 big blinds per hour, and for many professional traders, that's not very much money. So they choose that lifestyle because they want that lifestyle. I don't think it's very healthy or the best choice. I definitely could say that there's easier ways to make the exact same amount of money per hour with the same capital. And because of that, using efficient frontier analysis, that would prove that poker is not a good career choice. Regardless of the poker players, they might defend that, but it'd be their ego defending it, not facts. There's nothing you can do about that, but still, poker is fun. But once you've achieved ultimate mastery in poker, it's just a grind, just like anything else. Sharks just passing fish's money back and forth to each other. Anyway, I digress. So we're watching Minim, and look at the market is dropping more right at this moment. At 8:30, we had some economic data come out, and I guess it was not a help. Overnight, we dropped. And so the market is opening down, just like yesterday, gap down, opening lower, and Bitcoin opening higher. I think that we're going to see some just further price adjustment then. Probably going to have a replay of yesterday. Today will probably look a lot like yesterday. You can go look at that chart and expect exactly that, I'm sure. We're also looking at Minim and Omega for intraday day trades. But outside of that, we're going to be watching the market. We'll see what happens this morning. The market opens in 2 minutes. The definition of success, I mean, that's what it is. That's what it is. It started, back when all you needed to live was an apple, And then somehow we needed clothes, you got to make clothes. And how can you make clothes? We got to work a lot harder, so you need more than an apple. It's grown from there. And now we got to drive around a car and have a job so we can have an apartment in the city, so we can have this and that. I mean, it's like, but you don't really need anything more than, what you need. And anything above that, is a lifestyle that you've chosen. It's all energy. The calories, we just consume energy, GDP, the economy, everything, it's all traced to the same thing. Output per input. And amazingly enough, humans with their intellect are output efficiency creators. With the invention of the wheel, that was that kind of stuff. Now AI. Here we go. Market's opening in 45 seconds. Should be interesting. This year is projected to be flat. We'll have 4 rallies, with the biggest one from May to September. So preserve your capital in the meantime. Don't get chopped up. learn how to run a portfolio of sold options like I do. If you've got at least $2,000, you can actually start turning that into gains more consistently, more reliably. In the meantime, while the market's chopping, it's a beautiful thing. Send me a private message if you're out there and we haven't connected. Okay, yeah, you got 110,000. You should send me a private message so I can make sure you don't lose that. All right, market is open. Here we go. Alrighty, alrighty. Right out of the gate, I've got these 3 scans sorted by percent change from the open. Looks like we have, let's see, let's just give it a second. But this is not necessarily a signal day yet on the market. Welcome, Darius, Justin. Nice to see you all. Steve, RJ, and Randy. Hello. Randy. Who would have thought we would have 2 Randys in the same group? I mean, we've got a lot of Marks and Mikes. I mean, we've got too many that we couldn't even keep track. But 2 Randys? That's something. All right, out of the gate, the market is moving up a little bit. I believe we saw that a bit yesterday, and then it turned around pretty quickly. I think, we're going to get a replay of yesterday, potentially. I'm getting AZO and UNH alerts again. All right, I'll check on them really quick. Tesla thoughts, yeah, I'll check that out. And for some reason, I get a lot of Elises. Hello, Elise. It's a beautiful name. I was going to name my daughter, what was it? It was this princess from Disney. Eliani or something like that. Anyway, we named her Ella. Made it easier. No, AZO is not a signal. Okay. Continuing to watch the market, but at some point, by the way, the market's going to stop going down. And we are in a bullish economy setup, and the market has been on a bull run for 2 months. So at some point, this market will bottom on this pullback that it's on. If you measure the pullback on the most extreme instrument, which is the Qs, you get from top to the bottom of where we are today. How much do you think, how much does it feel like based on the fear out there and people going like, God, it's been 5 days down in a row, just by feel, even if just go by feel. How much percent down do you think the market is right now? What does it feel like? Based on the dread levels, what people are telling you, sentiment, people saying like bearish this, bearish that, the evil earwigs out there. What do you think? Digriff says -5%. What do you guys think? Let's get some other answers. Even if you know the answer, just sort of sense it. What do you think it is? To me, I think it's, if I had to go by feel and by sensing, I'd have to say maybe 6 or 7%. Yeah. Carl says feels like 5% also. So yeah, I'm talking about how much are we off the top? We got another answer, 5%. So I think you'd be pretty surprised to know that the S&P 500 from the very top to the bottom of today is down 1.98%. This is when you realize you need to get some new friends. Right? And stop hanging around with negative Nancy's. The S&P 500 is down top to bottom 1.98% in 5 days. This is a soft pullback in a very bullish run. So, you need to be preserving your capital. You need to be not giving it back by trying to get chopped up in bearish mindset trades. You just simply flatline, wait it out, and then find the entries when those signals come up, get in them, and then, catch the tail of the tiger while it's running. Or new girlfriends. Yeah, fuck that. Let's take a focus. Come on. Monk up. I know it's not November, but but monk up, motherfuckers. But the Qs are down a little bit more. The Qs are almost 4% down, but almost minus 2% on SP 500, but nowhere near is it minus 5% or 6% or 7%. And if you visually looked at the chart, you'd say, my God, this is quite a dip. Minus 1.98% and getting bought up. Most pullbacks are 7%. Just FYI. But they're also quite soft. It depends on the strength of the bull market. It can be even softer. But sometimes we do get a 10 or a 12% pullback. That's when you start to enter what they call correction. It's just a correction, and then a crash might be a 30% or 20, 25%, 30% or 40% correction in a rapid amount of time. That's what makes a crash. And by the way, a crash does not constitute a bear market. So crashes are opportunities because crashes don't change a bull market. Only if there can be a big enough economic change in the business cycle. So you got to think about that. When a crash happens, if a crash happens, like the pandemic or whatnot, you have to say to yourself, is this going to affect the business cycle? Is this going to affect the business? Is this going to cause layoffs? Is this going to, and if it does look like it's going to affect the business cycle, then you have to be a little bit more careful about how that ends up. All right, the market is, bouncing off of these lows. Looking very good. So far, and we know what we saw yesterday. All right, well, I survived that drop, and I'm going to go ahead and release my hedge now. That overnight drop, and remember yesterday I hedged up. Actually, yesterday I hedged up during the live stream, and then I de-hedged right when I got off the live stream. I mean, right at the end of the live stream. I almost immediately hedged back up, as I mentioned in the group. And then midday, took the hedge off, and then at the end of the day, put it back on again. So, it's not meant for you to follow me on that. Like, when am I hedged? So you should the same. More important is for you to make those decisions for yourself. But there we go. I've de-hedged now, as I've put myself in a position of having my portfolio protected overnight. And things are looking somewhat supportive and bouncy here on the market. Now, it's been 8 or 9 minutes out of the gate. What do we have doing the best? We have AMD. Let's take a look at AMD. Pfizer held up pretty good, yeah. Problem with Pfizer, probably. I'll take a look at it to be sure. Why is Minim on the list, may I ask? It's up a lot in pre-market, and yet it's really only for day traders and experienced day traders at that. Okay, so yeah, AMD with a nice double bottom. recovery back up and over yesterday's close and open, and probably on its way to becoming a signal. It will give you a literal signal at 137.57. Yeah, that would be the best, 137.60, because that's when it reclaims the moving average. That's when it gets back over yesterday's count. There'll be an entry signal on AMD at 137.60. Write it down. I'm not going to repeat it. I'm not going to be on the broadcast being your, holding your hand. You got to learn to wipe your own ass here. I am just showing you how to wipe your ass. There are ways to do it better than the ways you're doing it now. I can assure you that. Oh, God, that's funny. Yeah, AMD over 137.60. So you just need to learn the ways of the wise ass wiping. Number one, Costco. I wouldn't have it any other way. Oh, God, this is funny. It looks like Omega has made it up and over VWAP and inner pivot. For those of you who are intraday day traders, Omega, OMGA, is doing okay for day trading. All right. That is the riskiest way of trading, and should be the top and smallest part of your pyramid of risk on your capital. Came for the stocks, staying for the jokes. Well, yes. But, there's some good opportunities we're going to find here today. So AMD, that's one of them. The thing about AMD is it's a little bit slow. It's a little slow. You have to ignore my friend. Forgive my friend. So it's 3.5% ADR normally. So it's right at where we like, frankly. Okay, but lately it's been a little slow. 2.1% ADR today so far. Yeah, it's AMD. And AMD has been hot lately, so that's great. It went up 61% in 59 days. It's over 1% per day. And that's a speed we like. That's what it just goes to show that it says it's at 3.5%, right? That we say 3.2% is roughly 1% per day. It's almost nearly never fails. That the ADR percent can help you understand your expectation during a run or a medium-term hold, swing trade, that it should equate to about 1% per day in return. So anyway, I do like AMD there. Another one that's top of the list and doing well today is LQDA. This is a little bit of a smaller cap. Let's see, LQDA, not even $1 billion, but wow. Look at this huge catalyst day. This is what we teach in class. Jesus, I think probably RJ's and Marcus, you guys have been privy to the catalyst day lecture classes probably more than anyone. You should see this as incredible. This is quite the great opportunity here because look, you got this huge catalyst day followed by what? High tight flag, and hanging out above the high of the catalyst day. I mean, it couldn't get better as a signature, as a pattern, as a fingerprint, right? And all you're looking for now is a pullback, which we've had for 5 days, and all you're looking for now is a signal, which could happen right there at basically 1195. If LQDA can get to 1195, that'd be a signal point, and the worst case risk you could do is risk to stop to 1125, the low of the previous day, the pivot low on that pullback. That'd be like the most perfect scenario, and that's only 75 cents a risk. That's really good. So LQDA looks really great. Looks like I need to show the TikTok people that. There you go. Sorry. LQDA over 1195 is an entry. Now I'm going to go look at the options on that if it's liquid enough for me to take any kind of option position on it, but probably not. But if you do get shares, you'd go 75 cents a risk. Yeah, there's only 35 options total traded today across all chains, so that's way too low, way too low. But a beautiful opportunity for you who wish to trade shares. So we've got two potential opportunities today. You got to write those numbers down, by the way. 1195 on LQDA entrance, and I forgot the other one on AMD. But there you go. That's why you write them down. INTC also moving along with AMD. Perhaps it's signaling. Let's take a look at it. No, it is not. Unless it's bouncing. Yeah, if it can reclaim over that 20 moving average, which is at like 46.40, then yes, the gap down, move up, reclaim over a significant moving average is one of our secret signals. That's a very good one. And so that's Intel, INTC could also be. There it is. Boom. There, it just happened. Intel. And that's a trade I can get. AMD as well. I don't know if AMD is signaling right now, but Intel is, and they usually come out of the gate out of pole position around the same time. So those of you who are watching AMD, let me know if AMD just signaled as well. But I can tell you that to the decimal, INTC just signaled at 46.40, and it is running. It is getting away from us. So I'm going to be looking to put a spread on that. It looks like the 41 would be 16 delta. I'm going to go with the 42. And that will provide a 25% return on capital. And I will get 10 of those contracts. I would like to engineer that a little bit better, but that'll work. Okay, that order is out there, and there it is, filled. All right, allocated on Intel. How about AMD, everybody? Is it there yet? I'm going to go over to AMD because I'd like to get that too. I might already have it. I do already have AMD. I do. Let me see, though, if it's a signal. No, it's not. Interestingly enough, therefore, what can that tell you about Intel versus AMD? For those of you who've been with me for a while, what does that mean? What does it mean that Intel just got to its signal point, but AMD is not quite there yet? See what you guys say. Minim with a crazy ass blip back there. The answer is, because it seems like nobody is typing, is that Intel has higher relative strength than AMD. So, you think of it as Intel is a better stallion in the race. If you had to choose between the two, you therefore would choose Intel. But it can depend on their charts. Like, for example, AMD, we said, did 61% from low to high. Let's see. 60.57%. Let's check out Intel during that same period. %59.5%. So actually, Intel did less in that same amount of time, but at least right now, Intel's showing the relative strength. So this is one reason why I'd be in both. You still in dogs, Carl? Nice. Yes, dogs is doing that same thing that that other stock we looked at is doing. LQ. What was it? Wow, it's actually off the list now. So quickly it changed. Where is it then? LQ, whatever that was. You guys write it down. So, yeah, Dogs, DOGZ is doing great. It's literally called Dogness International Corporation. Your Dogness. Okay, if the Qs are going to make a new low, which it's kind of indicating it is, then I got to put that hedge back on. So I'm going to get ready for that. And I'll wait for that breakdown signal if it comes, but it's looking pretty much like it's going to. Now I don't even need to wait for it. The dollar is indicating, the VIX is indicating, oil is depreciating, gold is depreciating, rates are going up. So that's putting pressure on the growth market. Financials going up the same. So are staples, which is a defensive, and healthcare and utilities all going up. While there's a lot of pressure on growth and consumer discretionary, and communications down, industrials up, and of course tech down and about to break down. So we're getting another day of correction and pullback on the market. Let's take a look at the volume that we're projecting out on the market here. Okay, so well, it's hard to know if this volume projection will hold because usually it's off for the first hour of the trading day, and it's projected out from the first hour. But the prior days, if the prior days could tell us anything, it's that we're just having an average pullback here, totally average and controlled. Double check the SPY. SPY's been a little bit heavier. That's interesting. But the growth market does not concur, and that's where we get our most indication from. Right. Well, is there any questions, tickers you want me to look at? Intel is known for its better CPU. Yeah, but Ryzen is less less popular. Yeah. Otherwise, let's move into the group. What time is it here? Okay, we've been watching the open market for 22 minutes now, and it's choppy, back and forth. Now we're coming up off of that low. I would take my hedge off if it breaks to a new high. But I don't have a lot of faith that we're going to be going up today. I think we're probably going to go sideways just like yesterday and have a very similar day. But Bitcoin is flying, so that's really good. We're having a good day on Bitcoin. Is that one of my top? Yeah, that's one of my top stocks. I have others doing well as well. All right. Let me see if there's anything else I need to hit with you before we go back into the group. I think we're good. It's more pullback today, and we won't get a really strong signal on the market until the market itself gets up and over a prior day's high. That'll be the most important signal that you could get. But now 5 days in to this pullback, you could probably start drawing some downtrend lines to see when we break our resistance trend line. Okay, guys, see you back in the group. Thanks for tuning in this morning.